See, take your second and third module. See, in that second module, see, we have discussed national income, different types of national income. Now you need to have an idea how this national income is measured. Okay, for you to understand how this national income is measured, try to understand that there are 4 macroeconomic sectors in our economy, very important macroeconomic sectors, which all contributes to national income. One is household sector, household. Just have this idea in mind, household or individuals. Second is corporate or business firms. Third is government. Fourth is foreign sector, basically exports and imports. Just have this in mind. Now regarding, see, if you in national income, it is basically the goods and services produces, we have to calculate. Okay, in that way, so either you need to know the flow of goods and services, from where it will be flowing between these 4, either from the household to corporate or corporate, government, foreign sector. It will be the flow of goods and services will be from one sector to other sector. Now if one is the recipient, then for one person if it is income, for other person it will be an expenditure. So to understand or to make things very simple, we are given a figure in module 2. Take the module 2, that figure you take a graphical representation of flow of income between these sectors. Have you seen that? See, in this module 2, just see that figure. See the figure of module 2. It's showing, see, we are taking only these 2. To understand this, how this national income is calculated, we are taking only these 2. See, actually all 4 are there, but for your simple understanding, taking only 2 sectors. Which one? Household and business firm. Now we need to have an idea how the income flow happens in relation to these 2 sectors. If you take the top side of that household and business sector, that is supply side. If you see, household give supply to the business. For example, land, labor, capital, entrepreneur is given by household to whom? To the business firm. In return, if you notice one thing, for labor, business firm will give wage. For land, they will give rent. For capital, they will give interest, and for entrepreneur, they will give profit. So basically, these 2 are the income. These are the income for household. What? Rent, wages, interest, all these things or profit are income for the household, but expenditure for whom? Expenditure for the business firm. Okay, so this is actually the supply side of the flow of goods and services. Who supply things? Household. In return, they get income. So by calculating the total income of household, that is by adding all the total wages, total rent, total interest and total profit, we will get national income. So if you are calculating national income by this method, that is by income method of household, this is one method. What is called as income method? We calculate the income of all the household. Now try to understand. See, this is one method of calculate. So generally there are 3 methods to measure national income. One method is income method. In income method, we calculate, means add all the income of the household. So we will get the income method. Just have an idea. There is a method is there. See, UPSC will not ask in detail. Just have an idea. What is this income method? Don't go in detail. That's sufficient. What is income method is sufficient. Then when it comes to the downside, we have demand side. Now, business firm will give goods and services. Business firm will give goods and services to the household. In return, so the goods will be purchased by the, like a consumer like us, we will purchasing the goods and services provided by the business firm, and it is from our side it is an expenditure. From the household side, it is what? Consumption expenditure. This is consumption expenditure. I told you in the initial session, two terms, investment expenditure and consumption. This is consumption expenditure is expenditure from the household for the goods and services purchased from the business firm. So if you are calculating income, from this expenditure side, you can also add, means the entire expenditure and add it, you will get. So that is the second method. What is? Second method is expenditure method, where we will add all the expenditure. See, now try to understand that when we add, it's not only the consumer expenditure, we have to add all the four expenditure. But just try to have an idea. The second method, national income can be calculated by adding all the expenditure. In this case, it will be the consumption expenditure because it's a simple figure. Then or you can calculate national income by knowing the value of all goods and services, multiply with the prices. So multiply product method, we call production method or product method, where the quantity and prices will be multiplied and add all the goods and services, you will get national income. So three method can be used to calculate national income. That is, one is income method, second one is expenditure method, third is production method or product method. So from this figure itself, you will have an idea. See, this is sufficient. And in that material, so many technical definition have been given. That's not important for you. That's not at all important for you. For you, just have an idea. Three methods are there: income method, expenditure method, and product method. I'll discuss why I'm discussing this. One important current affair is there. For you to understand that current affair, what is called as discrepancy in GDP data, you need to have an idea, this method, income method and expenditure method and product method. For that only you need to have an idea, these three methods are there. Okay, now, so these three method you keep in mind while calculating national income. These are the three method followed by the government. Now in relation to this calculated, the easiest method is by knowing this, by using expenditure method. Expenditure method, you just calculate all the expenditures. How you can calculate all the expenditures? Add the household expenditure, add the corporate or business expenditure, add the government expenditure, and then add the foreign sector expenditure. We call it as net exports. Foreign sector expenditure is net export minus import. Then you will get the aggregate expenditure, total expenditure. Add all the expenditure. Now here only these two terms will come. Now I am explaining two important expenditure. One is consumption expenditure. Consumption expenditure is our expenditure made by the household sector. And investment expenditure, they are the expenditure made by the business firm or corporate. It's very simple. Investment expenditure are expenditure made by the corporate firm or corporate sector or business firm. Consumer expenditure are expenditure made by the household sector or individuals, their total sum. Now if you add consumption expenditure, investment expenditure, government expenditure and the foreign sector expenditure, you will get national income. So that is what in the one question why it was wrong. They had given only consumption expenditure and investment expenditure. What were missing? Government expenditure and foreign sector were missing. So if you add all the four, you will get national income. Now here in this method, income method, expenditure method and product method, now what is happening, especially after this recent changes in calculating GDP, what has happened is there used to be discrepancy in GDP data. Now this term is very important. What is called as discrepancy in GDP data? Why there is discrepancy in GDP data? And what is this discrepancy in GDP? Discrepancy in GDP is nothing but, okay, the government will calculate, see, we can easily calculate national income through expenditure method. Then calculate the national income through product method, and the difference in the product method and the expenditure method is what is called as discrepancy. Now why there is discrepancy is because we have very few people to collect prices. To calculate national income, we need to get correct data about the prices. We need to get correct data, and the statistician or price, the people who go and collect the price data are very less in India, very few in number, so that the data collection and the timely delivery of data is used to be, there will be a drag, and that mainly, this is main reason for a discrepancy in calculating GDP data is in relation to few people, or we call it as few, when you compare with the especially countries like China, it is said that we have only 1/4 or 1/5 of the statistics or price collecting people. Second is that we are not that much computerized in relation to data delivery, means data collection. And again, it's not, try to understand that it's not a problem in relation with national income. In economy, when we deal with economy, when we talk about all the major macroeconomic indicators, this will come as always a problem. What? Data collection. So we always have to, what generally we do is, we have to revise data regularly, and there will be major differences when we revise data. The main reason for this is that we are not getting data on time, or the data which we get is have to be changed, because that will not be a correct data. We mainly, most of the time we get data in raw form, and basically it will be in estimated. Now just keep this in idea. Now for you, from your examination point of view, you need to have an idea what is discrepancy in GDP data. That's it. What is discrepancy in GDP data? There is a difference between when we calculate national income from expenditure method and product method, expenditure method and product method. And rest of the thing you just go and read it and have an idea what is this method of. And I told you, don't go for the new method of it. In the figure, in the material it has been given. In the income method it is like this, expenditure method it is like that. But read the simple definition. Income method means add all the income, that is total rent, total wages, total interest and total profit, that is income. Expenditure method, all the total expenditure, that is consumption expenditure. Now don't forget what is consumption expenditure. Investment expenditure, government's expenditure and foreign sector expenditure, or we call it as net exports, export minus import. And there is a question related with, take module 3, there is a question number 2. What is the answer? C is what? Consumption. Y equals to C is consumption, that is consumption expenditure. I is investment expenditure. G is government expenditure plus total export minus total import. Now here, okay, that you have an idea.